for lack of a better word, is good. Read it right. Read works.
Hello everyone and welcome to episode 25 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out we went from 72 trillion down to 60, which is not great, but we are actually in a better position. All of our stocks are basically in a holding pattern, so we're not really concerned about our net worth right now. We're just concerned with taking advantage of the opportunities that the game is laying us, because whenever there's a downswing is a prime time to start investing in whatever market is down at the moment. And right now the market that's down is the stock index. Spot crude is ready to buy. Silver is getting close to its target price for purchase. Our target price on that is $12. And gold, if it goes up just another 300 points, we'll start selling it short. The only markets that are outside of the realm of possibility are wheat and corn. They're right in the middle of their pricing cycle. And we are just basically waiting for the prime rate to settle in some way. It's been going up and up and up, despite the fact that we have an easing policy. It's created a lot of volatility in the short bond yield, but we've already taken care of our positions there. We have both long and short swaps. And I said, I think not in the last episode, but in the episode before, that I expected our net worth to climb up to 300 trillion over the next calendar year. And while that's still possible, we did engage in a lot of long swaps. So unless the interest rate acts a little bit more normal, and we get over this little hump of unpredictability, that may be an overstatement of 300 trillion may be an overstatement. Probably grow and get above 100 trillion, but I don't know how high exactly over the next year if the interest rate does not calm down. So anyway, what we're going to do today to start out with is we're going to be buying some more oil. We're going to be buying both physical oil and oil futures if we can. We're also going to buy some more of the index, although I think this is going to drop for a little bit longer. I think it's going to go down to like about 11, the high 11s. So we're going to do the oil first, and we already have a bunch of oil already. We sold off some of it when the price went up to 80, but we're going to buy a bunch back. So let's go and see who has cash, because we're going to have everybody that has cash buy some oil. All right, so starting with Nomura, we're going to have him buy some physical oil. And we have 100 billion to work with, so we're just going to buy 250,000 contracts, or excuse me, units, and see what that purchase price is going to be, and then adjust. So you have to buy borrow 36 billion. So let's say no to this and buy. Let's try. Let's see. We have 180, so we need to mark it down by about a third. So let's buy 160,000. Didn't have to borrow for that, and it was 92 billion. Leaves us 16 billion, which isn't quite enough to pay our taxes, so we'll stop there. All right, let's go back to most cash. Burlington Resources would be next. Let's see, we have 80 billion. So let's say 120,000. And that's 70 billion. So let's go over to futures and have him spend the rest on futures. Don't know that it's going to let us buy the full amount. Let's try it. Okay, it's not giving us counter offers, so we're able to buy 25,000 contracts at a time. So I'm going to get in as many of these as I can. I don't care if I go into debt doing it, and I'll be back in just a minute. Well, we weren't able to get the full 500,000 contracts, but we did get over 400,000, and they're earning money. So we stopped having to borrow because we were making enough money off of these to just keep going. All right, so we can basically pay off our debt. Now the index is basically flat, but silver has shot up and gold has shot down. So I guess we're going to be leaving those alone for the time being. And we just need to figure out when we want to buy the index. If we want to wait for it to go down below 11. Not really a lot of movement on it, so we're just going to be keeping a close eye. When it looks like it's going to be bottoming out and heading back up, that's when we want to buy them. All right, so matter of fact, let's see who we're going to have buy it. What's cash? Let's see how much cash Nomura has now. And we still can buy some physical oil at our various companies. Where's Nomura? Did we use up all of his cash? I guess we did. Yeah, he's not even on the list. That's how I went by him. Alright, so let's have Toshiba buy some oil. Same thing with Cabot. And I don't think we control Samsung, but we can have United Technologies do it. 60 billion is going to be, I think, about 80,000 contracts, or 80,000 units, I guess I should say. And it's not. That's more like 100 billion. So let's knock it down to 50. Okay. Oh, I'm on Burlington Resources, that's why. Toshiba is not us. Wait a second. Did I choose? Let me go back here. Looks like I selected the wrong entity. Alright, so I selected Toshiba when I want to select Cabot. Alright, let's try this again. Buy crude oil. Let's try 80,000. And that was 51 billion. So I guess we can do 100,000. Right, so United is next. And he only has 60, so let's buy 80,000. Here's Bank of RakeM. Got all that income off of the bonds, finally. Making $1.03 a share. Alright, so next is Toyota. Mitsubishi Electric, and we'll do 60,000 for him. Real Networks. Mitsui's earnings are down. Tokyo's earnings are down, but not that much. Dayton Hudson's going to be our last one. Okay. Oh, I guess I can buy it too. Progressive's earnings are up. Alright, so gold is almost ready to buy, silver is almost ready to buy again. Corn has gone down to $3.89. If it gets down to $3, we're buying that guy. Alright, so what we're going to do is we're going to go back to work on our stocks. We got a bunch of these. We haven't touched them in a year, and I want to get through all of these by the end of the episode. Hopefully that'll be by right around the end of March, which is when our interest rate swaps will begin. And then hopefully next episode we'll start to see what kind of income we're going to be making off of those swaps. Alright, so let's go to NBC. His income is going up. We have a huge market share and we're growing too much. And let's see. We need to buy back our bonds. RakeM Insurance, his earnings are flat. All right, so we are very capable, so let's drop our R&D to 6. Let's drop our growth rate to 1%. And we have all kinds of cash, so let's increase our dividend and make it 3% or $1.05. Toyota is down. Okay. Wait, didn't I make that 6? Let's try that again. Productivity, 6. There we go. Must have clicked the wrong button earlier. Now, we could pick up CNN, but I think we want to wait till the swaps start having an effect. Plus, we have a pretty big market share already. Alright, so NBC is done. Next, we've got Pohai Steel, which we have Rio in there, however you pronounce this. And we want to basically merge the two, with Rio being the parent. So we're going to have Rio buy Pohai from the bank or whoever it is that owns him. He is worth $8 billion plus another $18 billion in debt for $27 billion. So we need some more money here. So we'll have Progressive give him $30 billion. We're spending 16% on R&D and our return is negative, so we have no dividend. And the growth rate is negative also. We are reasonably competent. And it looks like we have swaps to cancel, which we do. Oh, this one is with E-Trade. It's not one of ours. The cost per quarter is this. So what are we doing? This is a long position on the prime rate. And with a long position, we receive the prime rate. So with it being above 8.79, we're going to lose money pretty much constantly. So let's terminate it. It's going to cost us $1 billion, but it'll cost us a lot more if we keep it. Alright, so we do with his management settings. Okay, so we need to lower the R&D and give him a dividend. So let's lower our R&D to 14% and give ourselves a dividend of $1.40. And I think that's all we need to do. Okay, so we got rid of this one. And we took care of all that. Okay. Not ready, not ready. Corn is getting close. He was down further a minute ago. If wheat falls below 4, we'll buy it. And the index is down another 200 points, so we're just in a holding pattern on all those. So let's go to Dio. His income is up but sliding back because there's lots of, well, I expected these to be all in the double digits. All right, so we're spending 16% on R&D. We have a super small dividend. We've got cash, and we're very capable. So first things first, let's set our R&D to 6%. Give ourselves a dividend of $1.20. I don't really want to buy anybody here yet. Growth rate of 0 is fine. Just got a little too much cash, but oh, look at that. We just went up. Let's make it $1.40. So we just want to disperse that cash. Having a high dividend will increase our stock price. So that's all we need to do on him. McDonald's is next. Not ready, not ready. Close, close, close. And crude looks like it's going back down again. All right, so McDonald's. We've got a big market share already. We're reasonably competent in spending 12% on R&D. We are in a great cash situation. So we can buy Pizza Hut off of the bank. And we could buy Burger King here too. But that would give us kind of a big market share. Might be worth it though. Burlington Resources had a huge quarter. See how much Burger King is worth. He is worth $16 billion and has $26 billion in debt. And we have $22 billion to work with, basically. We have 32.1% and he has 20%. If we bought him, we'd have to grow negative for a while. Which would not be the end of the world since this one's expanding so much. So, I think we're going to go ahead and buy him and then we'll grow negative. We'll have like a 52% market share or something. But growing at -10, that'll go down pretty quick. Alright, so let's give ourselves a 66-cent dividend. And we're reasonably competent, so 12% is fine. So let's just take and pay down our loan as much as we can. and give ourselves that dividend. All right, that's it. All right, so next up is health management. And horn shot back up again. All right, so health management. We are grossly incompetent, and we've been that way for a long time. So it's time for us to restructure this company. And what we're going to do is we're going to write off $1 billion worth of assets in the process, which would be about 2%. Okay, so what percent of the assets do you want to write off? We're going to put in 2%. Okay, it's been approved. And now we're going to continue to spend this 21% on R&D and hope that when we come back, it starts having an effect, because it hasn't been for the last year. And this is us, so we don't have any companies that we can merge with right now that would help us out. And these guys are growing like crazy. So we're going to leave our 0% there. Still don't want a dividend because we aren't making any money. So we'll just let that restructuring do its work, hopefully. Keep your fingers crossed. All right, so getting closer, going down, flat, flat. Still not there. Okay. Next up is Inco Inc. And he's in the other mining industry that we don't have a piece of. He's got 4.5%. So we could buy Phelps Dodge here. Let's see how big he is. 25 billion, 31 billion total. He's making money on the index. He's got options that he's making money on. He doesn't have any physical commodities. And he has a loan, but enough to pay it off. So what I think we want to do is we want to have Mitsui Marine and Fire buy Phelps Dodge, give him about $15 billion and have him buy up the other members of that industry. And actually, we don't have to give him money. He can just cash in his index futures. And we are negative on ExxonMobil, and we expect his price to go down. So we'll hang on to those. It's not that much money anyway. All right, so I guess we do have to give him some money. All right, let's give him 10 billion. Okay, so first of all, let's buy Inco Inc. I don't think we own all of them right now. All right, there's 20% that's public. Leo has 56% and Facebook has 24%. We don't control Facebook. We can merge here and it would be a real small percentage of our stock. So let's see how much Facebook owns of us. 2%, which is just fine. Alright, let's pick up Showa Aluminum here. Alright, so he's mostly owned, so we won't mess with that one. Alright, so let's pick up this one. Aluminum of Greece. And now we'll merge and liquidate him. Alright, Xerix is next, or Cyprus, I mean. Alright, that's it as far as acquisitions go. Now let's just set our management settings. We need to lower our dividend to $1. We don't need to grow negative, so let's just grow at 1%. And we are somewhat mediocre. So let's make our R&D 6%. And basically, when these other companies come down to below 90%, that's when we'll look to pick them up. I don't like paying more than 90% of net worth, because when you buy 100% of a company, you're paying like a 20% premium anyway. So rather than overpay, you know, significantly overpay, I like for the prices to come down a little bit. All right, so let's go over to management. I'll set our growth rate to 1. R&D to 6, and dividend to $1. So that's going to cut into our returns initially, but over time it'll go back up. We were able to pay off most of our loan. Of course, we're going to have to borrow to pay these taxes. So we're going to end up with a loan of $7 billion, and we're not 100% owned anymore, so we can't just give him the money. So he'll have to earn it. All right, and so we'll change this to Phelps Dodge. Oops. Okay, now let's see. We were working on, who was it that owned Inco to begin with? Was it Rio? I think it was Rio. Okay, so we don't need to do anything else there. So let's go over to Time Warner. Time Warner. Income was down and is headed back up. Reasonably competent. Only one company worth buying. Growing at 8%, demand is 0. And we're reasonably competent, so we'll want to raise our R&D, but we don't want to raise it too much. You guys are all growing like crazy. Let's lower our growth rate to 1%. Let's increase our R&D to 14. And let's see, what is our dividend? Our dividend is 21 cents. Let's make that 24 cents, which is what we're supposed to bring in a single quarter. Okay. That's all we need to do for him for right now. plenty of cash on hand. The return's not the greatest, but with all this expansion going on, that's just the reality for now. Okay. Nothing doing over there, so let's go to the next one. US filter. By the way, GE just got sued by Honeywell, I think it was. Doesn't mean they're going to win. Alright, so here we have a 25% market share, and we are reasonably competent. We got excess cash. And we can pick up Browning Ferris or whatever this one is. Alright, so let's see how much he is. He is worth $8 billion and has $9 billion in debt, which is just fine. We can pay off most of the debt ourselves, and if we need more money, we can get it from our parent. Let's see, do I want to buy out the other shareholder, or do I just want to go ahead and merge? I think just let's go ahead and merge. Hang on, let me see what we're trading at here. We're trading at higher. And Browning Foreman is trading at less than his value, so we probably ought to buy out the shareholder first. And now we'll just liquidate him. That would cost less than buying 2% back of our own stock since it's trading so high. Alright, so let's pay off the majority of that. Let's cancel our swap. Okay, so our income is supposed to be up, reasonably competent. Let's see if we need to change anything. Definitely want to lower the growth down to 1%. We'll change our R&D to 14%, and we'll increase the dividend to 80 cents, since that's what we're making per quarter. That's Burlington Industries. For a second there, I thought that was Burlington Resources. Okay, oil's going back up, and one is down. Spot wheat, we're ready to buy. Spot wheat, we are ready to buy. So I'm going to buy some spot wheat. It's $200 billion to do the full amount. See who else has some cash. Okay, so Nomura has 90 billion, so you could buy 25,000 units of wheat. Hagemeyer could do about the same. Let's call it 20,000 on each of those. Burlington Resources probably the same. So let's get those three bought. I don't see Bank of RakeM on here, so we're going to need to go give him some money. Make sure that he has money anyway. He's negative 300 billion, so let's sell $1 trillion worth of prime mortgages. All right. Now, who else do we want to do it? While the price is still low, who else do we want to do it? Tochu, maybe? We could do 10,000. Unless you want to borrow. Let's borrow. You can do 20,000. All right. So I think that's enough. Less corn goes down. All right. So US Filter was who we were working on. And we were done with him. We could buy Taku also, but we've got a big enough share. Okay, so A&P is next. Our income is up and sliding back a little bit, but probably because everybody's growing. Okay, so we're at 1% growth, 16% and 1.5%. Reasonably competent. We've got money. Let's see if there's anybody for sale. And nope, nobody's underpriced. And interesting enough, the top 4 are all growing at 0 or less. Gotta get down here to Whole Foods before you get a big growth. We got a bigger R&D than everybody, so we're fine on that. And just give them just need to up our dividend to 2% or $1.02, and we're done here. We're bringing plenty of money to cover that. All right, let's go to UPK. UPM, I mean. He's in paper products. Look at that, 12.5%. He's mediocre, and as a minor factor. All right, let's see if we can expand here then. Let's see if we can expand. So we could buy stone, what is it, stone container? And I think it's like Glad filter or something. That really won't give us very big of a market share. And their return up here is negative, so maybe we should just hold on. Maybe we should just hold on. Let's see, we're not even wholly owned. Maybe we should just sell him. Let's see what he's worth. It's UPKM. Or UPKM. We can make a profit selling him right now, and he's not very big, so let's just sell him. We'll worry about paper products later on. Now's not the time. That brings us to Venator. Corn has gone down to 3.14. I am going to buy corn. That's another 200 billion, or 175 anyway. So let's just double check the bank, make sure he's still in okay shape. And that's all right. Our loans have gone up to 3.2 trillion, which is nice. Stock index is up about 80 points. We need to keep a close eye on that. Okay, so Venator. He's in bad shape in terms of his credit, but his earnings are going up from very negative to not so very negative. Grossly incompetent, losing money. Let's take a look. All these guys are in bad shape. We just want to wait for Sears Holdings here to drop below par value of 100%, and we'll just snap him up, and any others. How much of Venator do we own? 100%? Okay. But I mean, he's not very big. Let's just get rid of it for now. Let's give 20% of him to somebody. Doesn't matter who. Who are we going to keep? We'll probably keep Sheraton. Let's give him 20% of Venator stock. Fujitsu's up. So we'll have Sheraton sell this. And then we'll go back to the bank and sell the rest. And the index is still going up, so I think it's time to start buying it. And I think the only people with cash are going to be the insurance companies. Nomura is the other one that it would affect his earnings, but he doesn't have enough money because he spent it all on wheat. Look at that, we got a price of below $3 too, so Mitsui should buy some corn. Oh, just went up. Missed the opportunity. Okay, so let's go to RakeM Insurance and buy some index futures. I'm going to try to get as many as I can, but I don't expect it to be a whole lot. Just because of the counterparty situation. So I'll fast forward while I do this, and I'll be right back. Sadly, the index came down the whole time we were buying futures, and we have a lot of money tied up in commodities now, so I don't think we really want to put any more cash into those. That's not what I asked for. I want most cash. So yeah, we just really don't have anybody with a lot of cash. LinkedIn and NBC, with corn and wheat being so low, we could do some corn. Okay, so that's it. We want to cash out some stuff now. We need this, all this stuff to go in the right direction. And all of our messing around with commodities, we're running out of time for this episode. So let's get on to, actually we sold him off, so let's delete him. We need to get on to the rest of these. So Toyota Europe is the next one. His income is going up. He's one of the rare few with rising income. There's a few down here, just one really, that we can buy. But we already have a 30% market share, so there's no reason to do that right now. Growing at 15% R&D. We're very capable, so let's lower our R&D to 6% and let's give ourselves a dividend of $1.62. That's all we need to do for him. General Mills is next. His income is down and continuing to go down. Well, no, he's projected to go up. He's very capable, so we can lower our R&D. We've got a ton of cash here. And only a 13% market share. And we're only growing at 1%. So we can lower this to 6%. Give ourselves a 65-cent dividend. And I'd like to buy some more here, but they're all owned. So, we'll just worry about growing later, I guess. 6% R&D. 65-cent dividend. Okay. Organogenesis is next. He's in biotechnology, which is generally a good industry to be in. And we've got this growing like crazy. And we're the only one with credit, really. Let's see how much money we've got. Okay, so we're going into debt at this point. So we want to lower our growth rate. Industry growth is 13%. Let's make it 15%. We are very capable, so we'll lower our R&D to 6%. And we'll give ourselves a 71-cent dividend. And with those changes, our income should go through the roof. So from a negative, we're at 19.9%. And we'll think about picking these up later once we have some more money. Okay. Next is Mallinckrodt. His income is down and still going down. He's reasonably competent, yet we're spending 21% on R&D. Growing at 12%. So we can pick up BDX. He's worth 8 billion. And we have it. So let's buy him and merge him in. Let's take a look at these options and the futures. Stock index. Sold it short. It's going down. Let's cover that now because I don't think it's going to go down much further. We have options on Conoco. These are call options, so we sold short. So hopefully that will go down. Let me go take a look at that and see how how it's doing. All right, so that's it for him. He owes some money, but we'll worry about that when we get some more income in. So let's lower our growth rate to 1%. Let's lower our R&D to 18% and give ourselves a $1.64 dividend. All right, well, I sure would like to sell off some of our futures and physical commodities, but the numbers just aren't moving anywhere. Of course, we haven't had wheat and corn for very long, so naturally they're still going to be low, but oil just keeps flirting with going up and then hitting back to 60 and not really moving. Same thing with silver. It was up $1, down $1. Gold's been hovering in the 1100 to 1200 range pretty much the entire episode. Was briefly up, but didn't actually hit 2000, so we held off. Anyway, it's only February 17th, but we're getting short on time, so we're going to end the episode here. When we come back next time, we'll finish up the rest of these. We got a lot of mergers that we can do. We may hold off until the swaps kick in. But on April 1st, which we should get there in the next episode, we'll be able to review what we expect to make on a quarterly basis on our swaps. We'll definitely take a look at that. We'll also take a look at the oil industry when we come back next time and see just how well we're doing in terms of bringing the returns down there. All of those companies will start declaring their earnings in the first week of April. So it's something that we'll explore next time. All right, but that's it for today. Thanks for joining me. I hope you enjoyed it. If you did, please like and share. And until next time, this is RakeM saying, have a good one.